welcome back to another Chart Nerd TA update. Today I am going to be diving into EVERDOME and just looking at some potential plays here moving forward. You know, this project is normally one I tend to get quite a lot of interaction with, and I do believe it is an amazing project. It is just unfortunately suffering a battering. Okay, guys, it has. You know, if we zoom out from here, this is on the daily time frame. You know, since its inception, you know, I'm seeing a few other projects that look very, very similar to this. They've just had this massive impulsive move, okay, from their inception, and then they've just been shoved straight back down. It's basically what happens when you come up this quickly. Okay, you tend to retrace, whether it's as quickly or over a longer amount of time. Does it mean the project's not fulfillable of your wishes? Of course not. You know, I do believe in Dome. I do believe in its tech. I do believe in its symbiotic partner metahero. You know, and I still have faith. I do still have faith. Okay, guys, it looks very deadly. It looks very treacherous, you know, but these are the times I do think where potentially, you know, especially in this price action right here, we could be looking for some nice rally or to make some sort of some money here, guys. Okay, so not financial advice from what I say in this video, but I just wanted to get into a few patterns and a few noticeable plays that I'm seeing here for Dome on the daily time frame. So straight off the back, okay, you've got this yellow EMA, this 20, and this red 55. Now again, just zooming out to look at this perspective, okay, we haven't retested, guys, we haven't retested this daily 55 since back in May. Okay, if you look here, back in May, we haven't come up and retested this 55. You know, we've done it a couple of times in early, so one time in early May, and we did it one time in later May as well. But since that point, we've been stuck under this 20. Okay, we've been stuck under this 20 EMA, continuously getting rejected every time we come up to any sort of point of contact with it and being forced down. So basically, the EMAs, when you're in a downtrend, they force you down. As long as you're under them, you're in a downtrend. Okay, same with being in an uptrend. Normally you're above the EMAs and you're continuing above the EMAs and they're dragging you up. When you're in a downtrend, they're dragging you down. Okay, so the two EMAs I have on the chart here are the 20 EMA, which is this yellow line, okay, and the 55, which is this red. So as I said, we haven't retested this red since May, guys, May, you know, and we've been in this vicious downtrend under the 20. But what we're seeing right now, okay, is quite bullish. It is quite bullish, because what you've got over the past couple of days, in fact it was yesterday, we actually saw a close above the 20. Now when you get a close above the 20, in my eyes, your next target to me is the 55. Okay, because you work through EMAs and you work through resistance and you push up. Okay, so why I think we're going to get there is straight off the bat. Look, you've got this pattern here, okay, where Dome, it had a level of resistance, okay, so right here. Today we're pushing above this, you know, but yesterday we closed just on the same sort of line as we did back here. Okay, so basically what I'm trying to say is Dome had a low down here, okay, it had this low, it had a rally into resistance at the 20, it came back for support, and this is actually a higher low. This is an ascending level of support here, so these lows are higher lows than this previous lows here. So what you're doing is you're coming down, support, resistance, support, but a higher low, and then you come back up to resistance again. And today we're getting a push through this resistance, which is a good sign. So initially you're creating higher lows, okay, so just as an example, you're creating higher lows like this, and you're sort of coiling up in something called an ascending triangle pattern. Now when you do get the breakout, of which we're getting today, okay, we are getting today, but as you can see, you can have wicks that do tend to come back down. Okay, so ultimately we've wicked into this area again. We want to see a push through that to get the continuation up to this 55. Okay, but for me, we are in a technical target from this low. Okay, from this low, this ascending level of support and this double bottom. Basically, you've got a low and higher lows. Okay, and you've got a high and right now a higher high. So you're basically working up in this bullish structure like this. Okay, higher lows, higher highs, higher lows, and if we can continue to do so and keep this ascending level of support, guys, we're going to be in a target. Now this target is going to be, I'm sorry for my messy lines, you basically go from the resistance point to the down to the level of support, and when you come up and break that resistance line, okay, which is right here, okay, so this is our current resistance, which we're above right now. Once you break that, you're in a technical target to a price of 0.00293. Now, what gives some confluence to that as well? Let's just keep that price target in mind there. Okay, so I'm going to leave the price tag there. we're going to get a fib on from this low, okay, because we had this low, came up impulsively, rejected at the 20, came back, higher low, and now off this low, we're moving up impulsive. So we go from the low, okay, and we're retracing back up to this high, okay, this wick high here. Now, what you'll notice is that this 0.00293 mark sits bang on the 1414. So for me, okay, the simple fact that we've broken this resistance line, okay, we are now in a technical target up to that up to the 1414 at a minimum, in my eyes, at a minimum, you know. And whether we do get up there at that point, I would expect some sort of retracement back down, hopefully down to this previous resistance that we're now could turn into support, okay, because that's how it works. It's a game of support and resistance. This previous resistance, if you break above it and fall back to it for support and then get your continuation, okay, is a good sign. It's a very good sign. That's what you want to do, essentially. So all being said, my technical target right now is at that 1414 because you're breaking out of this ascending triangle pattern, okay, and you've got a series of lows, higher lows, and right now higher highs, okay. So as long as you can conform to this, it's bullish structure. That's basically what I'm trying to say. It's basically bullish structure, okay. So, you know, just keeping an eye out here. If Dome was to start to come back down and retrace from this point, you know, as I said, the previous area of support you would like to see, if it does come up to the 1414, the previous area of support you would like to see is back on these previous highs here, okay, this resistance line. As I've said, you'd like to see a fallback to support on the 702 or the 0618 around this area, okay, and then get your continuation and your bounce out of here, okay, back up to this 55 whenever it is and wherever it is coming down. As I said, once you break above the 20 and you get a close, it's good confirmation for a push up to the 55, okay? But it's not just going to shoot up there overnight. It could do, but if it does do something like this, very parabola, you're going to come straight back down again. Trust me. What goes up must come down. What goes down must go up. Now, what you can see here, what you can see here, as I said, equally, you've got this double bottom, and this is also some sort of Adam and Eve bottom where you've come down in this V-shaped recovery here, resistance, and then you've got this curvature. This is called an Adam and Eve bottom, okay, and they do tend to have high probabilities of breaking out to the upside, of which we are sort of getting a little bit of confirmation now. So again, the technical target, as I said, goes from the neckline of resistance to the neckline of support, okay, and when you break that resistance point, as I said, that's the technical target there to the 1414. If we just get that back in, it brings us up to the 1414, okay, right up to the 1414. At that point, I would consider taking some profits off the table, not financial advice. But when you do get up there, as I said, support levels, when you're going to pull back, have to be this 702, okay? And if you don't fall back to that, if we do come up here and don't fall back to that 702 area for support, the next point of support for me would be along this trend line, this ascending level of support here. Okay, so if Dome did come back or push up to that 1.4 and start to come back and lose this previous resistance as support and lose that and come back into this pattern, it would have to be the 236 for me as the last line of the sand, where you've got multiple points of contact. So you've got support, resistance, but you broke out, come back for support within the triangle, get a throwback in it, okay, and then come back up again and start to break out and create higher highs. Because at that point, what you'd be doing is you'd have a high, a low, and then you'd need a higher high. So you've got a massive low here, a high up here, a higher low, and a higher high. And again, that would be bullish structure because you're working your way back up the stairs and back up to these EMAs. Okay, sorry, that's a mess. That is a mess. But basically, guys, it's just patterns within patterns. So potentially what you've got on the cards here, okay, as I said, is this small ascending triangle right now. We've got this small ascending triangle, okay, and this could be at play of an even bigger triangle. So what I'm going to show you here is if we meet that target, that 1414 target, which was roughly around this area here, okay, if we do start to impulsively move up to that target, what you could say at that point is you'd be coming up to retest previous support and turning that to resistance. So right here on the daily, we came down, okay, we found support here, we rallied up to the 20, and then we lost that support, okay. So what Dome could be doing now, this is the next point of resistance for me, okay, which ties up just shy of our target that we're in now of this breakout of this ascending triangle. So if Dome has done something like this, or does do something like this, where it's coming down, right now it's forming this small bullish pattern. If it breaks out and comes up here, okay, and meets this previous support and turns it to resistance, at that point you'd meet the technical target plus a bit more. At that point I would expect you to come back down and retest this support line again on a larger time frame, on a larger scale. So what you potentially could be doing here, and then you get your your break up again to this resistance, you're in just an even bigger ascending triangle, of which you would have a technical target from around there to there. You know, if this was the case and Dome did break out, you'd be in a technical target back up to this swing low of previous support here, roughly. Okay, this is all rough estimates, I'm sorry, but you know, you just work your way back up the stairs, patterns within patterns, excuse me, which are bullish statements. Because as I said, you've closed above the 20, your next point of contact is this 55. If you come up to the 55, get rejected, you want to come back, hold a higher level of support, particularly on this ascending trend line, okay, and then get your breakout again back up to this resistance point, you know, and you've got a larger double bottom / ascending triangle with technical targets to the upside. So, you know, if we look at the weekly and see how that pans out here. Now, on the weekly time frame, guys, I'm not being funny, but it looks absolutely dreadful, doesn't it? It looks dreadful. But right now we're getting this engulfing candle, this bullish engulfing candle. As long as we close above these two closes, this is a bullish candle, guys, and we are starting some sort of retracement. I think at least, you know, if Bitcoin holds onto its legs and, you know, it doesn't shit the bed, then we could be into bigger targets. Now, for me, what you're looking to do, okay, is start to push back up to this level here on the weekly. Why? Because you can see how it works in waves. You came down here, support, resistance, okay, support, resistance, support, resistance, support, resistance. So your next point, you're coming back up to these previous levels here where you had previous support, okay, and that's where you're looking to try and get back up to, and i.e. the 20 weekly moving average, because you're so far, there's so much of a gap. There's so much of a gap between the price action right now, right here, and this 20 weekly EMA. When you get a gap like this, okay, you do tend to start to retrace back up towards it. Not that you have to and you get fully back up to that EMA, but when there's a huge gap like that, either to the downside or the upside, you know, you do start to retrace. And I do believe that's what EVERDOME is trying to do right now. Like this month, this weekly candle right here is approximately 50%. You know, we haven't seen a weekly size candle of that size for a long time, a very, very long time. This candle here was, I think, about that sort of price, 87%. Okay, and we had a nice 2 week push up here, but again, we got met into resistance and pushed down. But this, to me, is an engulfing candle. It's bullish structure. This wasn't an engulfing candle. It didn't engulf this candle. This candle didn't engulf this candle. Okay, and in fact, it was met with more resistance. So the fact that we are getting engulfing candles and closing above previous weekly closes is bullish. It is short-term bullish in my eyes, okay? So, you know, guys, that's just the key point to take away here, okay? So right now we are in a technical target of this ascending triangle, this small ascending triangle where you've got a level of resistance, a level of support, you're coiling up, and you're basically looking to meet this 55 as it's coming down on your head at some point along the line, okay? Because, you know, I'm not saying that it's just going to go like this and meet up to it straight away. Okay, you kind of work in waves. You could come back up here, come back for support, come back up here, come back for support, and eventually push up and meet this red 55 as it's coming down on your heads as your technical target. Okay, and at that point, I would consider, not financial advice, but if you did come up and meet this 55 at some point, I would consider looking for some sort of pullback either to previous resistance and turning it to support and getting a bounce off that, or a throwback into this ascending level of support here, into this pattern here, back into the ascending triangle, which would scare the shit out of people. But if you did hold that as support and start to coil up, as I said, you're in a larger ascending triangle with higher lows and looking for the breakout. And if you do break above this 55, you know, that it's just confirmation of more uptrend, basically. Okay, guys, so that's my play here in the near short term, a push up to this daily 55, which is a potential from current price, a potential of about a 40 to 50% long up, okay, if all goes well, and yeah, that's where we stand. And when we get to that 55, hopefully I'll do some more videos and see where we go from there, if it gets to that, okay? Because, you know, don't get me wrong, at the same time, Okay, I know these closes, I keep going off the candle closes, which is very important, but we do have these wicks right here as resistance equally. Okay, so if we fail to close above these wicks and get a close above 0.00239 where these wicks are, you know, we could still be in this sort of pattern here where we're coiling up like this, and right now we could come back for a throwback to support, and at that point I would like that to hold. Okay, I would like it to hold, because if it didn't and you started to lose this and hitting your head on this trend line, you're going to come back and ultimately retest these lows, and that's where it gets quite bearish. Okay, so let me just go into the bearish scenario. You know that my short-term scenario for the bullish side is to attack this 55. Okay, basically, simply explain. The negative side of this, okay, it would be if, you know, if this is a top point and we are running into resistance again, you're going to be going from this point here, retracing back to this low. Okay, and we want that low to hold. You know, I've said within that ascending level of support, you want it to hold. But if for instance Dome did start retracing here, and this was its impulsive move over, you know, what I would like to see it do is come back and hold the 050 or the 0618. Ideally, basically just not lose the one. If you start to come back down and lose these lows right here for Dome, that's when it's curtains and you're basically continuing your downtrend. And for me, the minimum targets would be these, okay, which I think is about another 40% decline from current price. If I'm wrong, maybe I'm right, maybe I'm definitely wrong, but yeah, a minimum of a 40% decrease from current price now, you know. But for that to happen, guys, okay, we have to lose these lows. These lows have to be lost. Okay, this is a line in the sand. This is the last line in the sand. If you start to come down and do something like this and create a lower low than this low, and essentially lose this low here and turn that to resistance, okay, your downtrend's basically continuing. Okay, so that's the bearish scenario. You're looking at a 40% drop from here, losing these lows, and basically you'll be in free fall mode still, with further capitulation. The bullish side is we meet the 55. At that point, come back for support, turn previous resistance to support, and get your continuation out of here. So that's just the simplest way I could put it between EMAs. Now again, going back to the EMAs before I go, look at this 20 EMA, this yellow line, and this 55. Humongous gap. And as I said, EMAs, they're like magnets. You get drawn back to them. So when you're too far down, you tend to get pushed back up into them. You tend to get pushed back to them. Same way if you're up to the upside. Okay, if this is the price action going up like this, and you've got the 20 like that and the 55 like that with a massive gap in between it, okay, the price is going to get drawn back down to earth, and you're going to come back to the EMAs. Same way as you're going down, the price is going down to the fucking hell, and now you're going to get a bounce back up, hopefully, to the EMAs. Just as if you know, opposites, same way. Okay, so this gap here indicates that we could be looking for a retracement back up to that 55, and I do think because of the close above the 20, you know, it's just giving confirmation that we're looking for that. One more thing that's very good to see here is the amount of volume in this box period here that Dome has been going through. There's a lot more volume, okay, than there was back, you know, for the last, God, look, it was stagnant for months. Right now the volume is starting to pick up, which is a good sign, you know, because it gives confirmation of this break. Okay, when the volume picks up, it just gives confirmation of the break, and there's buyers, and it's actual a real pump, basically. It's legitimate. Okay, so at the moment signs are good. Things don't look too bad. Are we out of the woods? Not 100%. Definitely not. We could in fact come up to this point and then get rejected and still lose this low. Okay, it's all a big possibility. You know, I can't see into the future. I'm just trying to give you my predictions of where we might be heading and what might happen. Okay, so for me, 55 bullish scenario, re-attack that and this previous level of support and turn that into resistance potentially. The bearish scenario is that you get rejected here at this level of resistance, come down, lose this ascending level of support, turn that to resistance, and you're looking at a 40% drawdown. So to me, it's either a 40% move up to the red 55, or you come back, lose support, and lose these lows, and you're looking at a minimum 40% drawdown to the downside. That's basically it, guys. I hope you enjoyed today's update from ChartNerd TA. Until next time, where I'll be covering more videos. Peace out. Take care.